That should be the network. That should be the network issue. All right. Okay. How many of us are? We have how many online? That's 27, right? Okay. If as I'm not getting anything from you, I will assume you are one of those people who log into the Zoom session just to sleep off. At least you know we can't see you, so you can do a lot of stuff. Some will put on a Zoom session just to mark their register and then they go watch some demos. While some will be chatting away the time, at least I'm there, registered. Okay, you can hear me, right? Okay, good, good, good. Actually, I can tell you this. Let me tell you one thing. Guys, I'm going to make a confession to you now, okay? I want to make a confession to you, right? I said I was not going to say this before, but I would like to say this to kind of maybe that will make you cheer yourself up, like you want to. Maybe some of us will take it serious. Because for me, I like money, but more importantly, I like to control money. So, in other words, I don't like chasing after money. I like to attract money because that's the best way, actually. Because when you run after money, you'll be exhausted. One of the members of our family here. So I saw on her status one day. So there was this description showing how we're supposed to hustle for money. I mean, how we should be running after the bag. So the inscription on that video. Okay, first of all, the video was showing a guy running after a bag, and the person with the bag is kind of on a wagon. So the wagon was moving fast, and this guy was running fast. So the idea of the video is to tell you that hey, you don't need to sleep. Wake up and run after the bags every day. That's actually on the positive. It's probably that hey, you don't need to stay. You can't stay in a place. You have to run after the bag. So they wrote the description as chase the bags, something like that. So in my own way, I look at it from a different angle. I was like, well, I don't think that's the right way. Chasing the bags is not the right way. You don't need to chase the bags. So I said, well, that because if you look at the guy, he's running after the bags, he's already exhausted, exerting all his energy running after the bags. The time will come, you get tired, old, weak, all bones and body will be in pain, and he will get so tired and he can't catch up anymore with the bags. And then what happens? He becomes broke, exhausted, tired, quit, and probably go to another network, like some people always do. But if instead of chasing the bags, that guy applied to become someone, become somebody, become a person that attracts the bag, then that guy is wise. So attracting the bags is better than chasing the bags. Now, how do you make use of this in this scenario? Or how do you make use of this whole thing that we talk about? Now, a lot of us want to just make money on the session. Oh, when is Kevin Moore coming on? Kevin Moore. Oh, when is Anodipe coming on? Oh, Kevin Moore 5-0. Oh, I've gone 2-0. Hey, Millie Mills. It's a good thing. But the truth is, even the educators will always tell you that, hey, if you are here only to make money, you're not learning anything or grow. And I want to ask you, have you seen anybody successful in this academy just by doing, oh, Millie Mills on, oh, that? Most of them will probably make money on Cambridge Moore session just to blow it on another session. Then make another one on Millie session just to blow it the next day on another session. Roller coaster, like a rat race. Now, these people are who like shortcuts. They don't like to learn. In fact, sometimes when the educators try to teach them, oh, okay, today we're going to be teaching, the market is not really good today. You see them start complaining in the chat session. In fact, I hate this kind of statement. Someone telling you that, oh, coach, I've not traded today. Coach, I've not traded today. I've not make money today. Those kind of statements. We don't want to be that. Traits, just like characteristics of anything. In biology, they'll tell you characteristics of this, characteristics of that. Same, we have characteristics of failure and characteristics of success. If you want, the first thing you need to do? You need knowledge. I hope somebody is writing. You need knowledge. Knowledge acquisition. Knowledge acquisition. Knowledge acquisition. You need to acquire knowledge. You can't run from it. Those with knowledge will always lead the way. They are the first to know. And when you know, you have an edge. That's why you say knowledge. When you know, you have an edge over those who don't. And when you have an edge over those who don't, then you make more than those who do not know. And the ones who know will only follow your trail. And following trail, the problem with following trail is sometimes you only take what we call leftovers. When people follow trails, they take leftovers from those who actually go after what they want. So now, instead of chasing the money, like, hey, jumping on every session from session to session, hey, anybody traded today? I've not traded with like handicap, somebody who cannot drive a car. Have you seen that that was what happened to me my first time of boarding a car anyway. Those days of manual. I bought a car for like 3 months, I couldn't drive myself because I never knew how to drive a car. I bought a car before learning how to drive. So there was this guy that was always help me, that take me out. Anytime he's not around, I'll be late for work. I'll be wondering, where is he? Where is he? And one day, one old man was beside me, was like, how come you have a car and you cannot drive? And you be by the side, as tall as you are, as old as you are, you'll be late for work because the person who can drive is not around. Are you disabled? One, and this is an old, very old woman telling me that. I was like, it's true. Can you imagine? In this 21st century, that's the same thing with people who are in this academy. They call it academy. What do you do in an academy? You learn, not jumping upon session and jumping like you are. I don't know if you've seen that movie, Jumper. Do you know the end of Jumpers? If you've seen that movie, they all died. You don't jump. It's dangerous jumping without even knowing where you're jumping. You know why I'm saying this? I'm saying this because sometimes if this were to be a session where we say trading session, I'm telling you this number would have been 140 because everybody wants to come and clear. But for me, they said if you've been doing something for years and there's no difference, you better change change your route, right? If you want to know how your future will be, look at those who have been in that same thing you are doing now before you. How many persons have you seen that have become successful in this academy just by jumping around? But the people who make money are people who stay calm, learn, practice, and they learn and then practice. They don't complain about sessions. They don't complain about subscription. They don't complain about, if you want to jump, please jump on Zoom sessions where you learn. Not jumping on trading session. And the days Onotipe is having a bad day or maybe he's not feeling fine, then what happened? Onotipe is on his own, is his schedule. He's not feeling fine. Then you affect your own day to hey, I'm not feeling today. Who is on now? Everyone will not come. Oh my God. So meaning your dreams and destinations, your destiny, your everything, aspiration, your life is tied to somebody else's decision and the way they feel. So if they wake up on the wrong side of the bed, and even though you wake up on the right side of the bed, they are all waking up on the wrong side of the bed, will affect your own side of the bed. Come on. You need to be more than that. Be better. Okay? If this were to be a live when we're seeing ourselves, I would say, tell your neighbor to be better. Okay? I'm telling you, there's nothing as good as freedom. I'm telling you, I love the way my life is right now. And I can tell you, a lot of people on this call right now will tell you the same thing because they already experienced what they call freedom. What is freedom? A level where you get to where you can take your own life in your own hands. You determine, you become the handler of the remote control. It's your life. You take control. You can decide when to trade and when not to. You can plan your life. I mean, do you know the sweet thing about planning your 5% daily goal towards your 90 days game plan? Is the fact that you know how to trade and use the strategy yourself. It's so sweet. It's so sweet. It's so sweet. And do you know the good thing about it? You'll be having, instead of you calling your coach or calling your mentor, please, I'm not taking any trade today. You'll be sending your trade idea. You'll be sending what's called your trade results to your mentor. Mentor, done. I like that word. When I see done, it makes my day. When I see a mentee sending me done, coach, I'm done for the day. 5% done for the day. 16% done for the day. Someone was sending me a message. Said, coach, I did 10% yesterday. I say, oops, I like that. That's the kind of message I want to get. Okay, I don't want to get this. Coach, is it call or put? Where should we put it? Should we enter now? But knowledge is actually elite. Now, first of all, so let's just write this down. First way, your pathway to freedom in this academy, because you know why I'm saying this. Hi, it pains me every day I see. There was a guy, in one of the leaders group. I think he's a coach Obi in that group. I think one of the groups. I think I saw Someone was posting, there's this guy, what's his name again? He was on a call yesterday. He's a P5000. This guy has been in IM Academy for 8 years. 8 good years, but he's still a P5000. Okay? So people are like, oh, wow. And this guy didn't give up. Can you imagine he's a P5000? But what you don't know about that guy is the P5000 though. But this guy has bought houses, traveled big. Do you know why? Because in a month, as a P5000 is consistent. He has some of them under him who are actually chairman, actually. He's like, you can be a P5000, that's a very big business. All you need now is just a few steps more, it achieves title and all that. But do you know what? Every month, these guys average on 50,000 USD profit from his trading. Tonight, I was in one session tonight talking about alpha, the alpha, what's it called? That's the NFT idea chart, alpha chart, something like on the DCX. Guys, a lot of opportunities on IM, as in this academy. You understand? Yes, that's Chairman 50 paycheck. Any that from his trading. You understand? Now, do you know that IM Academy planned this? Let me tell you how it's being planned. It's planned in a way that, if you know, for those of us who present the ESBI, it's planned in a way that when you get to the academy, you learn. When you learn, you practice, and then you start making money from your trading. You share your story with people. People join you. Make money from the IBO. You make money from 2 ways now. This money you make, you invest them. Now, where do you invest them? IM Academy has created another side of our department in the academy, which is SFX, stock exchange, and then the NFTs, where you buy NFTs, you hold some, you sell them, some you make money, a lot of money in the next 1 week. Then we have the ones where you buy cryptocurrency. These are areas of investment. Then you buy real estate. A lot of things you buy, then you become financially free. But all of this will never work if you are a jumper. All of this will never work if you are a sharp person. Can imagine somebody joining the academy telling me something like, Coach, I want to take trades. I say, why? Because, I want to pay. He's new. This guy is new. I want to pay rent. There's a rent I want to pay before the end of this month. I hope I can just make that money. I say, you are in the wrong place. Go and check. This is IM. The fact that it has M does not mean it's MMM. There's a lot of difference there. This is IM Academy. Now, Juju, my brother, So let's come and then learn. Okay, learning is very important. All right, quickly. So I was saying something. The first step you need to take is learning, knowledge acquisition. The second thing is what? You plan sessions, okay, around deliberate practical. I mean, when I say deliberate practical, like, okay, you are learning everything you are being taught, try and just go and practice them. How do you practice? Just simply by going there, that's why we have a demo account. Use your demo account and try them on it. Try everything you learn on your demo account. Even after you're funded, of course, not use your demo. Don't wait. And then see, before I go on, I'd like to tell you something. I'd like to tell you something very, very important. And I want you to take this before I go on. This is very important. And when you want to succeed in this, let me tell you, if you really want to succeed, let me tell you, trading is easy. I can tell you, trading is easy. Do you know why I said it's easy? It's the only thing you do that guarantees you, if you are on the right platform with the right knowledge, guarantees you at least 60-70% win, which is a lot of win when it comes to success in life. Because this night, I was watching videos of some traders, big time traders. I mean, who are not IM Academy members. These are big time traders, right? Who are not IM Academy traders, right? I mean, when I say big time, not that big time in terms of they are better than, but they are just doing well for themselves. They bought houses and all that. Do you know how long it took many of them to even get to the level where they can even trade and make money? The list of them was saying it's 10 years old. 10 years. Others 14, 20. These are young guys. The one that started at the age of 17 is now 27. That's the list of them. The rest 14 years and all that. Do you know how much they must have lost in the past? But you're in an academy that can make you. Someone joined this academy last month, okay, in July, and already a millionaire in August from trading profit alone. From $154 to $1,500. $1,500 to multiply by 690. That's million naira plus, isn't it? Someone just yesterday, you have a lot of people like that, right? So you should appreciate, in fact, I need some fire emojis for this academy. Put some fire emojis, because sometimes if you don't know you need to know the worth of something before you really appreciate. Put some fire emojis in this. I want fire emojis for this academy. Really, I'm telling you, I'm not sentimental. I'm telling you what is happening. Okay, guys, I said I was going to confess to you, right? Now, what's the confession? What's the confession? So you can put more fire emojis to this. I want to tell you the confession. You know, today is NFP, right? So in the morning, I saw a very nice trade. USD. It was so smooth moving. I never wanted to trade it. I was doing it on my demo. Then all of a sudden, I thought, this is so sweet. Look at do you know that every candle gives you, like, every 15 minutes, the first 15 minutes will retrace, the second 15 minutes will give you a push up. You know, like that. It's been long I've seen that kind of candle. You know what I did? And I took my account. I said, okay, since it's NFP. Yeah, thank you very much, Jaiz. 1% of my account. You understand? 1% of my account. So I was using $20. I started with $10. It cleared on my real live account now. Then I did $20. It cleared. Then I did $20. It cleared. Then the third $20. You know what happened? I made a mistake that I always want people not to make. And what was the mistake? So I had $20. The dot that was supposed to be between the 20 and the next zero, I never knew that I cleared it without knowing. You know, when you are using an Android phone, sometimes your hand they do some things that you don't want them to do without your permission. So the dot was cleared and it was already 200 and I didn't see it. I clicked after taking a call. I saw that I was $200 in the trade. Like, come on, I was like, hey, what is this? When I was trying to lower my risk 1%, I was already doing even more percentage, you know. So now I'm going to a point too. So as soon as the trade started, and it was 4 minutes because I used 4 minutes most times, the trade didn't pick up this time around in 4 minutes. And what did I do? Quickly, I went to check 15 minutes. So this trade is going to spend some time. What did I do? I rolled over in advance twice, meaning I wanted it to give 12 minutes. And what happened? To cut long story short, rolling over twice gave me 380 because I didn't want to lose the $200. I had to roll over 380 USD. Can you imagine? Now, I'm not telling you, like I said confession. It's not a good thing. It's a very big mistake on my side. But I'm saying this out because I don't have to lie to you. Okay? I didn't do it intentionally, but still it's wrong because you're supposed to calm down when you are trading. Always check all those things. I always tell people to check, but I didn't check. So to cut the long story short, the trade was clear. So I got 550 something USD from that trade. I was happy. And then I took one more. And then one more. To cut the long story, everything today, minus capital, profit in the morning in less than 1 hour was over 440 USD. Multiplied by 690. Who pays that kind of money? Even Mobi will not pay you that kind of money in a day, in the morning, in 1 hour. Even if you work in the US, they won't pay you 300 or 400 or something USD per hour, except you're a surgeon, which I'm not, far from it. Guys, the question now, why am I giving you this point? The point is, how was I able to know? Thank you, 303K in 1 hour, less than 1 hour. How was I able to know the right pair? How was I able to know the pair will give me clear? How was I able to know I should roll over 3 times? I'm not an angel. I'm not a spirit. I'm not a witch or wizard. Neither did I come with the knowledge of Forex in this academy. I didn't even come with the knowledge. It's not important. I never knew anything about Forex. I came in to learn and I got it from this academy. Without knowledge, practice, acquiring skills, 303K would have entered my account. Okay, there was this mentor of mine, showed me, she sent me a result, 3 clears. And I said, you are new. How did you do this? Do you know what she told me? She said, well, actually, sir, let me confess, I was just gambling. I didn't just know, I just taking trades. And she was just lucky. Now, compare. When you are taking trades with confidence, it's based on your knowledge or what you know, and taking it without confidence. So what I'm saying is this: having knowledge gives you more money. Not putting in knowledge, you are denying yourself the success you could have had maybe months ago. Are we together? Okay. So that's so I was saying something. I said trading is easy. That was why I talk about this thing now. Okay, it's easy to make money, quick money in trading. Easy. Okay, but it's only easy when you have the right info. Okay, and you execute that info based on what you have been taught. Don't do anything outside it. Okay. So the only thing you are here for is to be good at following instructions. I'm telling you, following instructions, because there's a lot of confusion out there when it comes to trading. A lot of people, all these YouTube gurus, gurus without enough money. They teach a lot of things on YouTube and all that. If you follow this one, you follow that one, you keep losing money. Oh, I want to go and use trading view. You're welcome. I've seen it before. Been there, done that. Now, so when you do this, you understand, it helps you to grow. Follow simple instructions and you will grow. So please, ladies and gentlemen, what I'm saying is I want you to pay attention, follow instructions, take notes, ask questions, because the night is yours for you to get better for the next week. All right, so let's get into it. Eventually, I'll need someone to help me share their screen. Hopefully, the market, unfortunately, today is Friday. The market is already closed. Plus the NFP issue, you know, maybe you may not be seeing anything right now. But still, let's just try. Anybody can share their screen. Even if you cannot see on Liberty, let's just use Trading View. I just want them to see some chat. So I can explain some of the things. So, like you said in the information for this training, I said we're going to be analyzing the market. It's always good to analyze every market, like every week, like a weekly close. You want to know, okay, what happened this week? How was the trade this week? Because you learn that way. Now, when you learn about the market, it gives you an edge. So when you know about the market, it helps you to guide yourself on how to navigate and trade your way to the top. Okay? Anybody willing to share? Or better still. Okay, all right. Thank you very much. I'm gonna make you the landlord or landlady. Somto, are you female or male? Sorry, I don't want to abuse gender. All right. So I assume, okay, Emmanuel, yeah, okay. Okay, I'm making you a host. So, guys, is going to be sharing his screen right now, okay? So it's always good to analyze the market. Like me, sometimes I don't just want to trade. I want to see the market. You know why? The moment the market starts speaking to you, you feel invisible. You feel untouchable. You feel confident, right? Now, talking about the analysis of the market, most of us will be hearing this week that everybody will say, don't trade this week. Try and keep your money. If at all you want to trade, do 1% of your account and all that. Why all this? Why all those instructions? Simply because every first Friday, okay, before that, there are let's say two major threats in the market. Major threats in the market. Two major threats in the market. And those threats are news and, well, still news and sentiment, so to speak. Okay, news and sentiment. But sentiment is negligible. Sentiment is not really, sentiment is just about whales of the market deciding to change the market trend. But that doesn't really happen more when it comes to forex, currency pair. It happens more in cryptocurrency and all that. That's sentiment. Okay, the guys, let's pump this up. Let's bring it down. That's sentiment. But news mostly is actually the main issue, the only threat in the market. Now, outside having knowledge, meaning you can have your knowledge, everything can be intact, yet the news may not favor you because news can change the market while you're in the trade, and that can affect you to have some bad days. But you can limit your bad days based on the risk management plan or discipline plan. Okay. Okay. All right. Can you go to any chart? Go to Liberty if you have Liberty or TradingView. But so while you're doing that, this particular part does not even need us to go into chat. Oh, good. Thank you. TradingView is there. Sorry, Liberty. That's Liberty. Yeah. Thank you. So, guys, NFP is the most threatened part of the news that we have. What is NFP? NFP, first of all, means non-farm payroll. I want you all to get this so you know what this really means. NFP means non-farm payroll. That's non-farm payroll. Okay. Now this happens every first Friday of the year. Every first Friday of the year. Okay. So what really happens? Simple. In United States, we all know that United States is the major market in the world, right? When it comes to transactions and business, United States. That's why everywhere you go in the world, you can go with US dollars. And you can just get there at the airport. You can change your money from USD to any amount, any currency in the world. It is acceptable everywhere in the world. Some countries, as a matter of fact, you can even spend USD there directly, like Nigeria, especially countries whose value of their currency, has no value at all. Now, so what is this NFP? Like I said, non-farm payroll. So what does it really do? It's just like every month, the United States release what we call economic data. Yes, non-farm payroll. So they release what they call economic data. Of course, economic data, like this is a data that is being released to let people know how many employments that have been created in the past 1 month, how many employments have been lost, how many jobs have been lost, how many jobs have been gained, how many businesses have come up, how many people have been paid. all those kind of things. You understand? Now, this data is always released by, I think, US Bureau of Statistics, but that's not our point. We don't need all those information. They're not going to put money in our pocket. But what matter is this: when this information is released, now before the information is released, let's say the first week, let's say like today is the first Friday of the week, right? The Monday of that week, most investors all over the world, most currencies, they start pulling out of the market. They pull their money from the market. Do you know why? Because when this information is released, this information is going to show whether US is going to be having a good economy for the next 1 month or not. You understand? Now, people want to be sure before putting their money there in the market. So they pull off their money from the market. Any decision they want to take about their businesses or transactions from every nation, as like all over the world, everybody put a hold on it to see the outcome of the NFP. Now, if the outcome of the NFP is showing a stronger economy, then people will push their money back. That is why you see after NFP sometimes you have a very good big move in the market, which means tomorrow you can see something good, depending on the result of NFP today. But if it is bad, also people will still invest, but they will invest strategically and gradually. Okay. So how does it affect the market? That okay, is US problem? Why should it affect JPY, LZD? You all know the answer is obvious, right? The US dollar pairs with every major currency. For example, you have GBP USD. Okay, let's start from Sydney session. Sydney. What is Sydney? Australian dollar, New Zealand dollar. Which other one? Australian dollar, New Zealand dollar. Hey, what's the third one now? What's the third one? AED, SED. No, not Canadian. AED, SED. That's Australia. That's under Sydney session. Okay, anyways. Yeah, Euro. God bless you. Yeah, Euro, AUD, NZD. So those are the three currencies. Now, if you look at NZD, AUD, Euro, they have US pair. Euro USD, AUD USD, NZD USD, AUD NZD. Bam. That's in this session. So you see, they rely on USD. Let's go to Tokyo session, which is Asia. Japanese yen, and CHF, Swiss francs, right? Now, those two, we have what? USD JPY, USD CHF. Let's go to London session, GBP. We have GBP USD. Let's go to New York session. That is US already, US. So you see, this is why NFP week is to have, that's why a lot of people have stayed from the market, because whatever happens in the US affects every other currency. So what happens is people don't put in their investment, people don't put in their money in the market. And when there's not enough money in the market, you know what you see? You see a lot of candles that have too many weeks, incomplete reaction. You see currency flipping in between. You can see a currency showing you 30, 50. Now, in the next 1 minute, it shows you, it changes back to maybe 40, 40. And that's the problem of NFP. And then a lot of people lose their money. But so much money was lost this past week. A lot of people were warned, but people still will not listen. They lost their money, And some made money as well. Okay? So talking about analysis of the market, this week, that was what happened this week. If you understand NFP, if you now understand NFP, can I see you put a 1 in the chat box? Meaning when you hear NFP now, you now understand. Can you put a 1 in the chat box? Also, under USD, under New York session, we have CAD, we have Canadian dollar. Put a 1 in the chat box. Yeah, if you know now what NFP is, put a 1 in the chat box. Good, good. Aha, this is good. We are learning now. So this will never be a challenge to you, right? Guys, this is how to learn. Yes, keep coming, keep it coming. Keep it coming. This is exactly how to learn. You understand? This is how to learn, because you learn one at a time. Like if there's one thing obstructing your pathway to knowledge, what do? You remove that one. So when you remove this NFP now, it can never be a problem to you. It is done, isn't it? Now, the next thing we want to talk about, like I said we're going to talk about news. Now we're going to talk about this instrument, news. Let me name them: news, timing, time frame, expiration time. People mix them up. Now, quickly, let's talk about news. The news Okay, for binary trading, you don't even need details. You don't need much on the news. All you need to know is, first of all, yeah, thank you very much. Go to Forex Factory. I think you want to do that, right? Now, when you go to the news, how to make use of the news to your advantage is this. First thing is, any currency, like I always say, we've always been saying this. All the coaches that have trained market strategy will tell you this. Like what you are seeing now. Today is September 2, and right now is 9:35 Nigerian time, right? I think it's 9:35 in Nigerian time, right? 9:35 p.m. Okay. Same with UK. Tanzania is 11:35. Ghana is 8:35. Depending on your country where you are right now, you just do the plus or minus. You know your timing, right? So as you see Euro, CAD, USD right now, all you need to do is look for the time that you are right now and check any currency against that time. Any currency that is mentioned around that time, you avoid it. But more importantly, we all know that already. What I want to talk about tonight is the color code and some terminologies, right? Like not even like just the color code. Yeah, I'll talk about that. So whenever you see this color code is important to your trading as well, because some people who ask this question that, oh, anytime we see a currency in the news, for example, around 10 a.m. in the morning, is it that we avoid that currency throughout the day or only that time that is on the news? Okay, to answer your question, this color code is very important. As you can see, in front of Euro, you see a yellow box. In front of USD, you see a red box. There's one more. In fact, there are about two more. There's orange box and gray box. Now, the meaning of this box is anyone with the, let me start from the gray. Yes, the gray. Anyone you see gray, that is blank, meaning no activity happening, like bank holiday, meaning there's no activity with that currency. Don't expect anything to happen with that currency. So you don't trade that currency at all if it is blank, and it's usually all day, as you can see against it. Anyone you see, the next one after the gray is orange. Orange is talking about minimum impact. No, sorry, is yellow. After the gray is yellow. Forgive me. Yellow is talking about minimum impact, which means a kind of news that only happen to just change the direction of the trend for a while. That's all. So when they say direction of the trend may be downtrend, and the reaction can just take it up. Okay. Then also, the trend can be uptrend, and then direction will take it down. But this will only happen for maybe few minutes, 30 minutes, 1 hour maximum. Okay, that's the yellow box. We call it minimum impact. That's the news. The impact of the news is very minimum on the currency. In fact, this kind of news really maybe 30 minutes, 1 hour after that news, you can start taking that pair because already you will have seen and have made this decision and you already know the direction, so you can take your trade based on that. So you remember the gray one, don't take trade at all on it because it's useless for that day. The orange, the yellow one is the next one, which is minimum impact. It's something quickly 30 minutes, 1 hour after that, you can start using it or considering it in taking it. But at least 1 hour, give it an hour. The next one after that is orange after the yellow box. Orange is talking about medium impact, which means it's always come with an event. An event like, okay, as you can see, OPEC meetings, MPC member man speaks. Now, all this kind of thing is where you see a leader give a speech that will affect the economy temporarily. So when you see orange, avoid it for a longer time. As a matter of fact, for me, I will even avoid it like all day. The reason is this: when the news is done, when the news is released, it's still okay. But when that news is an event like speech, meetings where decisions are made, it affects it for like the whole day or at least 2 days. Some go as far as at least 2, 3 days. Okay, before the currency finally gets its bearing. That's the medium. The last one is the maximum impact, which is the red box. Now that is dangerous. Okay. Now that one, as you can see, look at the kind of this unemployment rate. Non-farm payroll like NFP. Average hourly earnings. When they decide how much, what do you call it? What do you call them now? Minimum wage should be maximum wage. It leaves an impact on such. Okay, so you want to do away with them for that day as well, if possible. But yellow boxes, you can trade them in the next 1 hour, 2 hours, at least 1 hour, 2 hours after that. So that's how to use news to your advantage. Okay. So when you see the news, instead of you asking question, coach, can we trade this news? Just look at the box. Is it yellow? Is it pink, orange? Is it gray? Is it red? You know when to trade them. Okay. If we get that, also, I'd like you to put a 2 in the chat box because we're moving on gradually to the next and to the next to the next. If you get that, put it 2 in the chat box. So we bring all of this together at the end of the explanation. We bring them together. I'll use them in your market trap strategy. Good. I'm saying two. So many people are getting it correctly, right? Good. All right. Thank you. All right, good. Now, the next thing I want to talk about is timing, the difference between timing, time frame, and expiration time. Now, people mix this up a lot. Okay, timing, time frame, and expiration time. Now, let me start from time frame. I think I sent the book to the group, a small PDF book to the group one time, which is a candlestick Bible, something like that. Yeah, candlestick Bible. I don't know how many of you have seen that book. How many of you have read that book? If you actually seen that book and read that book, I'm telling you, you're gonna be a genius reading the market. As a matter of fact, the market will be talking to you like you communicate. Yeah, thank you, King B. Yeah, Daniel Achiever. Yeah, well, 168 pages. Yeah, but the good thing is very interesting page, right? Yes, you've read it, Jais. That's good. See, I have people really doing the right thing, following instructions. Huh? It's always sweet when we all follow instructions, you know. Now, why do I say that? So, talking about time frame, what is a time frame? Time frame is talking about the number, or let me say the time. Okay, the time on each candle. Every candle you see here, what do we call candle? What you see, the red and blue long box you see here. Okay, don't worry, we'll send it again to the group. As you can see, thank you very much. Can we all see this red and blue thing going up and down? Okay, the blue one and the red one. These are called candles. What are these candles? What do they represent? They represent the duration or time intervals, okay, with which you want to use to analyze your own market, to analyze the market. So let me give an instance. Let's say the normal market. Now I'm going to be talking about the normal local market. Okay, there was a time during COVID-19 in Nigeria. Let me use Nigeria as an example. I don't know if it happened in other countries. Okay, where they give timetable because of COVID-19 to reduce crowds. So there was a timetable for market transactions like meat sellers. They categorize them meat sellers, whatever. Group A, this one, Group B. So if Group A comes on Monday, on Tuesday, Group B will come, Group A will not show up. Do you get? On Wednesday, this group will come, this group will not show up. Now, if you're going to ask, that is also called time frame. So if you look at it, the Group A only have on Monday 24 hours. Their candle will exhaust on Tuesday. They don't show up. Then the Group B will take up on Wednesday, on Tuesday. The candle exhausts. So the same thing. This candle you see here is to make your life easier. Those days, before the invention of internet, computer, technology, Web 1, Web 2, Web 3, forex traders used to find as in just to be a hard time understanding the market. You know, for you to be a forex trader, you have to have plenty newspaper, read the news, check what is going on in the US, check what is going on. So you'll be able to know whether the currency is strong. So they publish the strength of every currency in the market in the newspaper. So people read, and decide whether to invest in this currency or not. But thank God to technology. So all of these things, the candlestick was created by a Japanese man then. And this candlestick, the idea is each, we call this thing candle. What you are looking at that is what we call candle. Okay. Now, each of these things represent a time in the market. So you now decide, okay, depending on the kind of trade you want to do. I want to trade a currency now, USD card. This USD card means I want to know whether to invest in USD or to invest in Canadian dollar, which is the transaction between two countries, Canada and the United States, right? But this investment is based on the number of transactions that is carried out in a day between US and Canada. The import and export, the immigration level, the visa. When you buy visa, like in Nigeria now, when you go to apply for visa, each time you paid money to the United States to get their visa, it helps their currency to get stronger. Each time the United States goes to Nigerian embassy in the United States to buy their visa, it makes Naira to. So the data is covering how many transactions is more on the Nigerian side, or sorry, on the United States side or the Canadian side. So if Canadian has more transactions that is favorable to Canadian dollar will be strong for that day. But you are not trading for that day. You can choose to trade for a day, for 1 hour, for 30 minutes. But all those, anytime you choose, you must know what is going on in that time. So this candle helps you tell you that, oh, if you want to trade for 5 minutes, when you click on that 5M, as you see that 5M on the top right corner there, as you can see the 5M is 5 minutes candle. It means every candle you see here is 5 minute transaction in the market. So every 5 minutes, you want to know what is going on. So when you click 5 minutes, it will show you candle. Any candle you see here is 5 minutes. So every 5 minutes, the candle will get exhausted. Okay, that is what we call time frame. So what do you need time frame for? It allows you to capture your trading, to know that, oh, I'm trading, I'm looking at the market between this time and the next 5 minutes. That is what we call time frame. The time that is attached to each candle, which is what the intervals in the market based on your choice. Okay. Now, so when it comes to time frame, is not your own making. It's just the one that's happening in the market. Now, timing. Let me talk about timing. Timing is the best time to enter a trade. I mean, where you enter a trade from, the best time to take a trade. When you say timing now, the best time to enter a trade. So according to consensus, for fast trading like scalping, for those of us who know what scalping is like a trading that you do in minutes, like whether it's forex or binary. In any trade that you do, like you just enter the market, maybe 1 hour maximum, 2 hours sometimes, 15 minutes mostly, you come in and out. They call it scalping, sharp, you come in and out. You don't want to stay long in the market, okay? Those are what called scalping. Now, the best time, the best timing for scalping trade, which means faster trades, in and out trade, is 15 minutes. Why? Because every 15 minutes, the condition of the market changes. Now, what do I mean condition of the market changes? For example, I hope you are taking note of those things. For example, if the market is uptrend, which means the market is supposed to go up. Yes, up means on the way up. Now, it's just like you, when you are driving a long distance, at some point you want to stop to buy fuel. Sometimes we stop at fast food or restaurant to eat. Those are resting points for us, right? Now, for the market also, there's a major resting point that is just the market, especially for short time traders, and that timing is 15 minutes. So every 15 minutes, the market comes to a rest normally. So which means if the market is on its way up, every 15 minutes, it will retrace backward. We call it pullback to come and rest to gather some strength. And I want to tell you the logic behind it so you understand. Now, Somto, I'll need you to, if you can point on your screen, it will be good for me. You can just touch the screen, it will show you, it will bring up lines. So that lines will make us to know. Okay. So I want you to touch the resistance line, the red line. That is the resistance line. Those small red lines at the top of those candles, horizontal line, those lines, the short ones. Can you touch them? Is it possible? Okay, put your hand on the screen and hold it down. Put your hand on the screen and hold it down. Exactly. That's how to show. So we are seeing it now. Guys, can you see where he's pointing with those lines there? That red, yes. Now, can you see that red thing? That red line? Yes. That red line, yeah. Now, that red line is called resistance line. The work of those lines is to help, to stop, like an obstacle, like a barrier to stop any price that is going up. So since we have them everywhere, on the way up, they stop prices from going up. They control prices from going up. We call it price control. Now, when people who are buyers and who want price to go up, on their way up, they know that they're going to meet resistance like this. And anytime they touch resistance, you see what the blue are the buyers on their way up. The moment they touch that red line, what happens to it? It sends them backwards. They will turn to red. That red line turns blue to red. And when you are red, you start coming down. And when you start coming down, what happens? On your way down, you see another line, which is the green line. It's the same size as the red line, but this time around is the color. The color is different. If possible, you can touch the green line for them. Let them see. Look at the current green line now. As soon as they touch that green line, the next thing you see, the market is not closing now, is a blue line, sending it backward again. So what happens there is this. So when you're on the way up, the red line stop you from going up, then normally you obey and you stop. When you're not stopping, what you are doing, They are coming down to gather strength. So the people, the buyers will be sent down, and the sellers will win, and then they push them down. They go to the green to collect more energy so they can continue their journey up. Now, this time around, when they touch the green, they turn back to blue. On their way up this time around, most times they break through that red line. The red line will not be able to hold them again. Now, they will continue going up until another red line stop them, send them backward again. Now, the thing is, every time you see these candles come backwards, that is a resting moment. That resting moment is what we call pullback. Okay? Now, this is a 5 minutes, right? 5M, right? You see, do you notice that it takes 3 candles? Is it 5 minutes, right? Okay, it's 15 minutes. Is it 15 minutes or 5 minutes? Okay, good, good.
I just
No, it's
changed
okay.
it to
It's
5.
okay. Okay, all right, it's okay. No, you can leave it even on 15 minutes. Anyone. I just want to know, so I will use an illustration. Yeah. As you can see, and the market was on its way up. You know what happened now? The red line sent it backward, and after sending it backward, it took them 3 candles. Do you know what 3 candles means on this chart? It means 45 minutes because every candle represents 15 minutes. That's 45 minutes. Okay, to get to that level of the green and then start coming up with a blue. So what this means is the timing that we use helps you to time the time. Sorry, I'm using time. It helps you to time the moment the market used for their resting. I mean, the resting point for the market. So that resting point is an opportunity for you to come in and join the trend. Okay, I'm going to get to that part too at the end of the before we finish this talking about entry reasons. When we get to entry reasons, but I just want you to know that timing.
Hello. I think Coach Ismail's network took him out. Let's just hold on for a second. He's gonna join back in.
Hello, guys. Can you hear me? Can you hear me? Can anybody hear me? All right, good. Thank you very much. Sorry, the network is doing. The network is coming. Maybe NFP is affecting the network as well. But it's okay. All right. Thank you very much. All right. As I was saying, so the time frame is the time for the candle for every transaction. Okay. The timing is the resting point. So every 15 minutes, so we use 15 minutes for the timing. Okay. Because is the rest is the what do you call it? That's the resting point for every activity. So after you have decided that okay, I only want to study the market within
Tom, so
15
you
minutes
can share your
interval.
screen.
Yes, please. So after you have decided that this market I want to trade, I only want to trade markets that are 15 minutes interval. I don't want to trade 1 hour market interval. I don't want to trade 5 minutes. I want to trade on 15 minutes interval. Okay. Or I want to trade 5 minutes. You decide that. Then the next thing is You now know that timing is when you enter the market. Every resting point of the market is the opportunity for you to enter. Now, you now know when to enter. But the question now is, how long do you want to stay in that trade? How long do you want to stay in that trade? Now you have entered. How long do you want to stay? Because you know that two things are very important when it comes to you entering the market to trade. Now you are putting your money on one of the currency. Let's say you are putting your money on USD. So which means you're putting your money on USD, which means you are saying that you expect USD to go up, which means you expect the market to go up. The moment you take that decision that, oh, go to your broker, that broker, who are the brokers? First of all, let me tell you, who are brokers, guys? Sorry, I'm taking you back to basics. Brokers are those middlemen, because the market, the financial market is a very big market. You can normally people like us should not trade. We don't have the license to trade in the big market, $1 trillion market. It is cheating if you look at it on them. If we bring $100 to become a millionaire in the financial market, you understand? Imagine somebody bringing $100 to the market, and you now become $10,000 profit earner in the market. You know, the guys that are spending millions and billions in the market will be like, "Come on, this is cheating, isn't it?" So they don't allow people like us to trade directly in the market. So for us to enter the market, we have to go through brokers. Brokers are like the middlemen, you know, that help you break the deal. That's why they call them brokers. Okay. So they make it so they have the huge funds to go into the market. So you leverage on them. When you bring your $10, $100, $50, they make it look bigger in the market. So whatever they get, they take fraction, they take your own commission for helping you to get access to the market. That's why sometimes when you win a trade, you see payout to be 60%, they take 40%, 80% they take, and when you lose a trade, you don't get anything. They take 100%. Now, those are the brokers. Now, when you go to these guys, you now tell these guys that, okay, Mr. Broker, my name is Ismail. I studied the market, and I think I like the 15-minute interval type of market, and I'd like to go into that market anytime from now. Okay, so you look at the time. What time is it? 9:56. You tell them I want to go to the market 10 o'clock. They say, okay, no problem. What is your decision? Are you buying? Are you calling or putting? Which means, are you expecting USD to go up, or you're expecting to come down? You tell them I'm expecting USD to go up. They say no problem. Now you know the rules. They tell you that they'll tell you that with that. Hey, you know the rules. So you have to tell us how long you want to stay in that trade. Which means, are you staying there for 5 minutes, 3 minutes, 2 minutes? Because let's say you stay there for 3 minutes, you won't be able to go out of this trade until 3 minutes exhaust is until it expires. Okay. So what that means is, and within that 3 minutes, your trade must maintain upward trend, which means the USD must be above or keep going up above the points you came in. So if 3 minutes expires while the USD is still up, you win the trade. But if 3 minutes expires meeting the USD going down, okay, downwards, then you lose the trade. That's the condition. So you now decide which time you want to use. So you tell them, okay, I want to spend 5 minutes in the trade. That's what we call expiration time. That is your decision. How long do I want to stay in this trade? But the condition is, no matter how long you stay in the trade, just make sure that the time expires meeting the condition you trade that you are investing in, which means meeting the currency on the way up, if you choose upward trend, or on the way down if you choose downward trend. Now, that's the difference between time frame, which is the number of time the candle will spend to get exhausted, which is the interval between the transactions and the transactions in the market. The timing, which is the resting point, which is your point to come in and join the market. The expiration time is the time how long you want to stay in the market or in the trade. Okay. If you understand these three things and you know the differences now, can you put a 5 in the chat box? If you have a question on it, write it down. You ask during the Q&A session. Put a 5 in the chat box if you know the difference between these three things. All right, good. Now, so I want to assume if I can see 1 5, others are sending 5 5. I want to see your 5 5. If you really get it, that is clear to you. All right, thank you. Thank you all. All right, good. Now, with this now, I like to clear one confusion with a lot of people that are already using market trap strategy. You know, sometimes I get people tell me this, that
Coach, the market is supposed to be an uptrend because why? We all know why now. When they say uptrend, meaning the first currency, which is the base currency, we call it base currency. The first currency is higher than the code currency. But me, to make it simple, I'll just say whenever you see the first currency is higher, then it's an uptrend. When the first currency is lower, then it's a downtrend. That's simple as that. Okay. Now, normally when you go to your trader and you want to analyze, and you see, oh, USD is higher. Okay. When you say USD is higher, okay, you know that this is an uptrend, right? But you will now come to something. We need to go to Liberty. Okay, good. You want to show them the strength. Okay, okay. Thank you. It's okay. So as you can see, this is what we mean by strength. Okay. Look at those bars as you see. The longer the bars, the stronger the strength of the currency, of course. The stronger the currency. So look at JPY is kind of the strongest, and the NZD, they are the longest there, so they are the strongest, right? While GBP is very low, Euro is very low. So that's what we mean by strength. Okay, so we can go back now. But it is actually represented in number so you can understand. So when you go to Liberty or your market strategy, on the strategy, you see there it will be written in numbers. Okay, let's see if it is there. Can you click the alert panel? It's on the top right. No. Top right. No. What? No. You went to Web Slinger. Go back to Market Trap. Yeah. So that's the alert panel on your top right corner there. Yes, guys, can you see what we mean? I think we all know this already, and most of all at least. You see AUD Okay, let's start with the first one. AUD CHF. You see the CHF is 62 and AUD is 46. That is a downtrend because the first currency is AUD and it's lower. Now, when you look at okay, but I think the AUD is having more number. Kind of, let's say it's AUD is 62, while CHF is 46. It will be it will be an uptrend, right? So that's a simple thing that we know. Now, sometimes this is the confusion that people tell, hey, good, just hold up there at this alert panel. So let's use AUD JPY. For example, someone will come to this place and it's like, okay, no, AUD JPY is almost the same. Okay, let's use AUD CHF, 46.62. Someone will come here and say, okay, AUD CHF. Which one is the first currency? AUD. And what is the score? AUD is showing, the point is 46 points for AUD strength, which means it's lower, right? So which means supposed to be a downtrend. Now, someone will now come and say, they see a call. Look at that thing, it's showing call. Let's go, click on AUDCHF now. Click on AUDCHF. Now, close the alert panel and go to the chart. Let's look at AUDCHF. I want to clear that confusion now. Okay, so come there. Good. That's what I want to show you. Now, this is supposed to be a downtrend, right? Because the first currency is lower. So most people will come there and say, Coach, I'm confused here. I'll say, why? They say, because it's supposed to be a downtrend, but it's showing call score for 3. And sometimes to show call score for 5 is a downtrend though. Some people will go and take it for a call because they will believe that instruction means the trend of the market. Guys, the difference between the candle and the market direction is very wild. It's very wide. Now, I'll give you an illustration. Let's say you go to Lagos Island Market. Okay. In Lagos Island Market, they sell shoes, they sell clothes, they sell things, they sell electronics, they sell a lot of stuff. Plenty different kind of things they sell there. And every day they want to check the amount of money that is being transacted in Lagos Island. That's the general market. They put that on one side. And they want to check the amount of money that is generated by shoe sellers. They put that on the other side. Do you think the amount of money generated by the shoe sellers determines the direction of the market? I mean, shoe sellers are just like one out of 100 type of businesses that are done in the Lagos Island. So do you think only the shoe can determine the direction of the market? No, good. That is how a candle is to a trend. Now, what is a candle? Remember, the candle is an interval, the transaction interval, which means the point, okay, if you're choosing 5 minutes, which means 5 minutes transaction in the market. Each candle represents 5 minute transaction. When you choose 15 minutes, each candle represents 15 minutes transaction. So whenever you see the call score or put score is not attached to the trend of the market. is attached to the current candle. If the current candle is on its way down, okay, now guys, look at, there are two things I want you to notice. If it's on its way down, as soon as, remember this is a downtrend, right? Now you expect this candle to keep coming down, right? The market will be going down. By the time the candle gets to a point, remember the point I told you, the resting point. Where do you see the resting point? Those green and red candle, the red line that you see. You know, I showed you a green line and the red line. The one that stopped it on the way going up and the one that stopped it on the way coming down. Okay? Those two things you see, they are like, what do you call this thing? Trampoline, right? Is it trampoline? That thing that you bounce on, that's when you jump on, it bounces you up. The moment you step on it, it bounces you up, throw you up, and bring you down again. You go down, you touch it again, it bounces you up. So that's how those lines are. Okay? Now, the moment the candle keeps coming down, on its way down, this call will be showing puts, puts, bouncing castle, yeah, something like that for kids, yeah. So the candle will the call score will be showing, the score you see here will be showing put score. Put score is talking about the current movement of the candle, not the market entirely. So since the market is coming down, the moment the market touches the green, the score will change to call, because so the idea of that call or put, that arrow, is to tell you, just to alert the guys that, oh guys, it has touched the green, now the next thing is to go up. Is to tell you that you want to trade, that's A, so you will know when to enter and when not to enter. So meaning, let's say this is a downtrend, which means you are selling, which means you're expecting the market to go down. Because you see a call score now does not mean you will buy or you expect it to go up. No. It only tells you that, see, right now is on its way up. So don't put your money now. Do you get what I'm saying? Right now, the candle is on its way up. Don't put your money now. That's the present candle is on its way up. But when it gets to the top and the red one, when it touches the red, you see the instruction. Okay, now you can put your money and go for downward trend and go for a put. So the meaning of this is not to tell you that the trend is changing. It's only telling you the present candle, the direction, where is it going, not the direction of the market. The market is AUD CHF, transaction between AUD and CHF. The direction of the candle is within that 15 minutes or the 5 minutes you choose. What is happening within 5 minutes? Right now, in 5 minutes time, market is not moving. Market is coming down for now, okay, which is the resting point. Okay, after that 5 minutes, what happens? Market picks up again. Do you get the point now? So for every resting point, the score will tell you where the direction of the market is for now. But you, what are you looking for? You are looking for puts. So you don't call because you see call. If you get this understanding, put a 6 in the chat box. If you now know the difference between the score and the trend of the market, put a 6 in the chat box. So which means whenever you see a score now, you know that score does not determine the trend of the market. It's only talking about the present candle and where it is going right now, whether it's resting or it's going back up. Good. That's being cleared. If you have any question about it, write it down. We'll get to the Q&A you ask and I will go back to it. Now let's go to the next one, which is the most interesting part now. Entry reasons, guys. Entry reasons. If you like, you can write this down. There's what we call entry reasons. You don't just enter a trade without having a valid reason. What are entry reasons anyway? It is clear, self-explanatory. You know, the reason why you enter. Why did you enter the trade? Okay, you are going to Lagos Island and you get to the motor park and then you join a bus going to Lagos Island. Someone asks you, why did you enter that bus? You tell them because I'm going to Lagos Island. But why did you enter at this point? You tell them because this is the motor park. So why do you think it's the right place to enter? You said because this is the bus stop where buses convey those who are going to the island, right? That's your entry reason, okay? Now the same thing with trading. You don't just jump into a trade without knowing what is going on. I've heard people say things like, we'll be taking trades like, oh guys, as long as it's 10 o'clock or let's say 10:15, enter this trade, but make sure it's touching the green line, for example, or make sure it's touching the red line because it's downtrend, right? Now, the moment we enter that trade, Have you entered? How many people have entered? You hear somebody say, hey, coach, I've not entered. Can I still enter? You don't even need to ask that question because when you talk about entry reason was the reason why we entered at that time. The moment that time passes, no matter how good the trade looks like, don't even ask that question. Can I still enter? It has passed. But then sometimes we can still tell you enter, but you'll not be wondering, how do I know when to enter and why not to enter? Why would I know whether to enter or not? These are what we call entry reasons. Now, talking about entry reasons, I'm going to be going deeper a bit. Now, for example, this is the binary trade. And the binary trade have two directions. Either it's going up or it's going down. So whenever you want to put your money, you put your money whether it's going up and going down, right? Now, what are entry reasons? Number one, if you want to enter this trade and you want to clear, at least you want to have 80% of clear. And let me tell you one good thing. If you want to avoid heartbreak and blowing your account, avoid emotional damage and trauma, whereby you lose money and you're like, I don't know why I lost that money. You need to know reasons. Now, the reasons of entry involves number one, support and resistance. I hope you're writing. Support and resistance, which we call support means the floor, resistance means the ceiling. Those two red lines. So, can you point them? Can you point those lines for us to see, for everyone to see? Support. Touch the support. The green one is support. The one below, the floor, the green lines, all those green lines, small lines. The one that you see above the arrow. Yes, this line. Yes, that one. And then any other one you see that is green. They are all supports. What are support? Support, we call them support because they are like the bouncing castle that help the market to continue moving up. Because the moment the market comes to touch them, the candle comes to touch them, they start going up. And as you can see them, for all of us, can we see that every time the red candle comes down and touch the green line, it turns to blue and they start going up. And when they touch the red line as a blue candle, they turn to red and start coming down. And then it continues like that on and on and on like that, right? Those guys, the one at the top is called the ceiling, the red. It stops them from going up, while the one at the bottom is what? The floor stops them from going further down. Now, when they gather strength, like I said before, they go there and break this one, and then they face another resistance, step by step, just like you now. You know, there's a challenge you faced when you were a baby. You couldn't walk. In fact, it started with you not being able to talk. You see everybody talking and you want to talk like them. They start saying something like da 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 da. That's your first resistance. Each time you try to say da 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 da, you know, you see those saliva coming out from your mouth as a baby, as a toddler. Now, when that happens, you rest. When you rest, meaning you come down to touch the grade support to gather strength. When you gather strength, by the time you go up, you start saying da da, mama, whichever one you choose. Now you have broken the resistance of before, which stop you at ta 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 ta. So you go to the next resistance now, which is ta ta. Mama stops there. Then you want to say some other things again. Then what happens? When anytime you try to do that, you regurgitate, like things come out from your maybe food, things you've eaten before will come out from your mouth. That's the second resistance. Then when you have that resistance, what do? You come back to resting line, you go to support, which is the green line. You gather strength again. Then later you'll not be able to say that the you know, before you know it, you start talking. Before you know it, you crawl, you walk, you wobble, you fall. When you fall, resistance, you go back to support. Support gives you support, you stand up again, you crawl, you wobble, you fall. You go back. So before you know, you start walking. Before you know it, you start running. Before you know it, you do all these things without, you know, unstoppable. So that's how the market moves. Okay. Now, why am I saying all of this? These two things are very important as entry reasons. What do I mean? Some to can you come down to touch the RSI and the stochastic area? For every resistance you see at the top, they represent that red you see at the stochastic and the RSI. Now look at the RSI is the black line below the B and S. Those black lines. So you see them when they touch the red, those black lines like snake at the bottom. You see two identical black lines. Okay, sorry, you are struggling with the phone. It's okay, but I believe people can see it. So see, you don't enter a trade unless those black lines are touching the red. You enter them at the red line, you see there, or at the green line, depending on the trend. So if it's a downtrend, your trade must always align with that red line at the top. Meaning the time you enter the trade must be the same time this black line is touching that red for a put. And if you are entering for a call, it must be that same time is touching the green line.
If they are not touching any of the two, don't enter the trade, no matter how tempting. Because if you enter the trade, there's no good reason for you to enter. The reason you enter that one is you know that anytime you enter a trade, you want to enter a trade where it will take you up or take you down. But a trade will not take you up if it does not touch the green. It's the green that will bounce it up, bounce the castle. So if it's not touching the green and you enter, you don't know where it will take you. Maybe taking you up or down, then you're gambling. But you want to be sure you are going up. So you only wait for it to come to the green, for you to go up, which is a call for an uptrend. Or if it's a downtrend, you wait for it to touch the red, which is what? The one that send them backward, downwards, which is a downtrend for a put. Entry reason. The same thing goes for that support and resistance. You already seen the pattern that when it touches the red, it keeps coming down. When it touches the green, it keeps going up. So you only enter at this point. And if they ask you, why did you enter? I say, because that is the point of reversal. That's the point of pullback. That is the point where they rest. That, for example, support is where they come to rest. If it's a down upward trend, if it's an upward trend, sorry, if it's a downward trend, support is where they come to rest. Am I saying the right thing? You don't take it. But write your question. Come to the when we get to the Q&A, you ask that question. Sorry. So if it's a downtrend, if it's a downtrend, red is where it comes to collect strength. Okay, the red line. Okay, that's where they come to get strength and rest. So you only enter at the red because when they are, let me ask you a question. If a bus is moving, going to the island, and you want to join the bus, and you don't stay at the bus, at the motor park or at the bus stop, will you be able to join that bus in motion? Will you jump into the bus in motion? I need an answer. Can you jump into the bus that is in motion? No, because that can lead to death, damage, or anything that you don't like, right? So what do? You wait at the arresting point. So if you miss a particular bus stop, what do? You wait at the next bus stop. You know that this bus must stop for you at this bus stop. So these are bus stops where you can enter the journey. So you don't take trade in between. Even if it looks good, sometimes if you see it that is like, let's say the first candle is down and the second candle is still down, you're like, I should have entered that one. There's no English like that. In trading, don't say things like I should have, could have, should have. No. You know why? Because when your gut and your strategy tells you not to enter, strategy is your reason. You have reasons why you enter the trade. Okay? When your reason is not there, don't enter. And even if your reason is not there and you don't enter and the trade actually go the way you want to go, it's just like a moving bus. We all know that it's going to the island. But it's moving. It's not good for my health to come in. I could die. I could have an accident, a permanent damage to my body, right? The fact that it's going to the island and eventually got to what I've done successfully is saving myself from harm. Will I die? No, because there's another bus coming and pick me up, and I'll still get to the island at the end of the day with no broken arms or death. But if I jump into a bus because it's going to the island, then that's something bad for me. So you only enter a trade when it's at the resting point. So any trade that is going downwards, the resting point is the red point. That's where you enter. The one that is going upward, the resting point is the green one. That's the first thing you need to do. So that's first thing. Okay, you need to check out for. Okay, we call that area of value. Somebody should write it down. Area of value. Okay, area of value. Never trade far away from your area of value. Why do we call them area of value? Because that is where the actions take place. That's why I call them price action. Action takes place in all those areas. What are those actions? One action, depending on the trend, one action supports the growth, helps the market to go in the right direction, while the other one is the resting point. So the resting point is where you want to enter from. Okay? So there's always so guys, I hope you get that area of value. So always target area of value. Now, talking about area of value is one reason. The second reason is timing. Remember, make sure that the time you are entering that area of value is aligning with the timing. So it's 10:18 now. The next 15 minutes timing is 10:30. Remember, every 15 minutes, remember, the market conditions changes, right? So right now, it is what? So if you are going for this trade now, you wait for this trade to come to the red line at the top because it's a downtrend. But it must be the same time with what? The time that you have on your clock right now. Okay, so 10:30 is the next time now. So you wait for 10:30 for it to come to the red, and then you take it for a downtrend. Okay, that's another reason which you put together. Now, guys, second thing I want to tell you, this one is kind of technical, so I want you to pay very good attention. Oh, before I go on, if you understand the first one, put the 7 in the chat box. If you understand this one I just mentioned, the first entry reason, put the 7 in the chat box. You see, all these things will help you take a good decision when you are trading. But remember, they are non-negotiable decisions or conditions, which means if you don't see them, if the market does not look like them, don't go to the market. But leave the market alone. Partially. You know what you do for me? Partially means in part. So there are some parts you get, there are some parts you don't get. Keep the other part. The question and answers that you ask, and I'll complete and make it a whole for you. So you can give me my 7 back because you're owing me 7. King B, you're owing me a 7 too. All of it are the same partly. Okay? I'm owing you the remaining part, and you're owing me my number 7. Okay? All right, till the end of the Q&A. Now, the next thing is consult the higher time frame. Seek help from the higher time frame. Always seek help from higher time frame. Another entry reason. This one is one of the best reason. In fact, let me tell you, this one is always sure most times. This one is like you can take trade market and there's no news and there's no NFP. Okay? And the strength are very apart. You know all those ones. We're not talking about those ones tonight, right? So write the second one. Consult the higher time frame or seek help from the higher time frame. And I will explain what that means. Go to 5 minutes first. First of all, let's look for a trade. Now, there are times I want you to look at this is 5 minutes, right? Now, the red, put a line, eh? Let's do something. Can you shrink? Okay, don't worry. Just do you know how to pick a horizontal line from this toolbox? Yeah, okay, good, good. Thank you for shrinking now. Good, pick a horizontal line. Now, put it on that support, the red support, that has green by the side. Bring it down. Let me tell you, I'll tell you where to stop. Keep bringing it down. Bring that, keep dragging it down. Oh, where is it? I can't see. Okay, bring it down, 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 down. Okay, okay, no, up, up. You are too fast. Up, slowly, slowly, slowly up. Keep going up. No, you are okay. Sorry, it's not easy for you with the phone, especially when you are sharing your screen on Zoom. I know. Let me tell you, that's one of the reasons why I like somebody else to share. So I won't go through all that. Thank you. Sorry. So bring it down, down. I want you to come down to the yeah. Close, you are close. Come down, come down, come down. Yeah. That one. Yeah. Good. Stop there. Drop it. Drop that line. Guys, there are times drop that line, tap it. It will put a line there. Good. I would have watched it. Oh, you have moved it. Put it back. Good. Leave it there. Now, can you go and make it bolder? Make that line bolder on the toolbox there. Beside the color, the lines, just click the option. No. Don't zoom it. Put it backward. Push it backward. Don't worry. If you don't know how to do that, don't worry. We'll manage it like this. Don't worry. I don't want to make it complicated. Now, guys, can you see that line? No. Stop zooming. Stop zooming. It's okay. Yeah. Can you see that line? That blue line down, See that blue line is resting. This is 5 minutes, right? It's resting on this area there, right? Now, that area you see, you have red line there and you have green line there. So which means if this thing is on its way down, okay, it can come there to rest. If it's on its way up, it can also come there to rest because it has done that before in the past. Now, sometimes we take some trades. I will tell you, some of you will know this now. I think this is the best way for you to know. You know, there are some trades you want to take. You are waiting for timing. It's almost 10:30. Now, let's say it's a downtrend and you're waiting for this trend to come. So, meaning on the stochastic analysis side, what do you wait for? What do you expect on the stochastic analysis side? If it's a downtrend, where do you want the black line to touch? If it's a downtrend, the red or green? For you to enter for a downtrend, for a put, the red, good. Thank you, Blessing. Who else? Good, Jesse, the red. Now, have you noticed that sometimes you are waiting for this and you see it coming to the red, and as it gets to the red, okay, it doesn't stop at that red. It kept on going a bit above the red. How many of you have noticed that before? If you have noticed that before, say hi. I mean, not hi like hi, sorry. I mean I. Just put a I, like I, me, myself. Good. You've seen that before, right? You now see that on 5 minutes, it touch the red and it still be going above the red a bit. Now, whenever you see such things, that means that trade is aligning not just on 5 minutes, it's going to align on 15 minutes as well. So do you know what you do when it comes like that? The moment you see any day you see the black line passing a bit above the red line, or depending if it's a downtrend or is it an uptrend, it's passing a bit below the green line, quickly switch to 15 minutes. Now, for us to prove that, so this line that we put here now, the blue line that was put here, want to be sure that this line will be on the same spot with 15 minutes candle, despite that they are different candles. Remember, each candle you see here is 5 minutes, which means when you go to 15 minutes, 3 candles here make 1 candle in the other one. So anyway, you see 3 candles here, they become 1 candle in the other one. Let's go to 15 minutes. Now, guys, you see it now? Go back to 5 minutes. I want to see something. Can you see 789? I want you to see that. You see that there's an M shape at the top on the left. Okay, M shape standing on top of the blue line that Somtochukwu put there now. Like M shape coming out from the left side. Then the remaining part of the M is the red line that passes through the line downwards and then went up again in blue line and in blue candles upward, right? See that M. Now go to 15 minutes. 6, 7, 8, 6, 7, 7, 8, 9. You see, both on 5 minutes and 15 minutes, that line is almost the same. You see this point now. Any point you see that red line, any point you see that the red line or the green line of 5 minutes is the same as the red line and green line of 15 minutes is a very solid point to take. And I will explain to you in a way that you understand. So which means sometimes, how many of you have noticed this? That sometimes you are waiting for 10:30 to come and you are going for a put. And put means when the black line touches the red line, you take it for a put. Okay? Now, on 5 minutes, the black line is touching the red line, and you go to 15 minutes, it's also touching the red line at the same time. How many of you have noticed that? If you have noticed that, put a 1 in the chat box. Before that, okay, the same time, 15 minutes, the black line touching the red line. You go to 15 minutes, it's the same. If you have noticed that before, okay, put a 1 in the chat box. Now, so, okay, well, King B, only you, right? Blessing, I've noticed that before. Now, whenever you see such thing happen, that means that place is a very strong place and it's very potent. And that kind of trade, you don't lose it. That was what happened with me with NZD USD this morning. Most of the same time, it aligns on 5 minutes, it aligns also on 15 minutes, the same spots. So whenever you are confused on the 5 minutes, you go to the 15 minutes to check how is, because you know why? 15 minutes has limited candles. You don't have plenty of candles because 3 candles has already become 1. So you'll be able to see clearly. That's why a higher time frame always helps you to see clearly. Now, let me give an instance. So whenever you see a trade that is coming and the black line is supposed to touch the red, and you see the black line touching the red on 5 minutes without passing through the red, going above it, then you now quickly go to 15 minutes and see. On 15 minutes, you see that that same black line is either resting on green line. If it's resting on green line and does not move at all, that means that trade is only aligning for 5 minutes. So you can take that trade on that red line on 5 minutes. Okay, let me explain that again. If you see you're expecting a put and it's almost 10:30, you now see on the 5 minutes, go to 5 minutes, you now see on the 5 minutes that see that red black line now. Okay, you see that point where you see the black line will pass above the red line a bit. There are points where you to go there and touch the red line. So that area where you see it touching the red line, that means that trade is only aligning on 5 minutes. So you don't need to go to, when you go to 15 minutes, you'll see the black line not even leaving the green side, is on the green side, not even the red side. So that one now you can take the trade at this point that is on that red on 5 minutes on timing. Okay, that means that trade is only aligning for 5 minutes. And for those of you who take swipe option, you see sometimes the black line, because Somtochukwu is using a phone, the black line is the one for the stochastic and RSI. Can you try and see if you can touch? Okay, let me show you something we call annotation. See on your left,
Ah, it's not on your left. I'm trying to see that annotation. If you can see annotation, you can use it. Can you touch the stochastic for them? The black line at the bottom. Those two identical black line. Is it possible you do that? Okay, good. Can you see it now? Can you see the black line I'm talking about? So that line that is looking like a snake. Okay, can you see both of them? Those are the line we're talking about. Thank you so much. So when you see this line touching the red without passing over it, like you see in the middle there, so can you point the part where the line is passing over the red a bit? You see that spot? Good. See that spot? That spot, that trade aligned, eh? That trade aligned on 15 minutes. Do you know what that means? I'll tell you what it means now. Then can you touch the other part where it only touches the red? It didn't pass through the red. I mean, it didn't go above the red. Good. That one is number one example. Then this other one too is another example. That one aligns on 5 minutes. Only on 5 minutes. But the other one that passes through the red aligns both on 5 minutes and 15 minutes. Now, what is the difference? I'll tell you. Now it's 10:30. Guys, now if this line, red line, is only on that, touching the red line as it is now, you can take the time, you can enter your trade now from this point. But if you see it passing above the red line, even if it's 10:30, you have to go to 15 minutes. You switch straight to 15 minutes. Now, I want you to put that line that you are holding now, this line, switch it to that one that is passing over the red, the middle of it. Good, good. Good, just stay there. What is the time there? 2020? No, no. Okay, so around 2020, 2010 and all that. Now go to 15 minutes. Now, good. Can you see where it is touching the red of 15 minutes? It will be around 2015, 2020, 2020, 2015, 2020. Put that line around that area. See the time. So which means, can we see what I'm saying now? Now imagine you enter that trade at 5 minutes, aligning. That's when you enter a trade for a put. You now see it's still going up even after 10:30. And you're like, this is not coming down. You know why? Because it's going to align at 15 minutes red line. Okay? So what you do is you wait. Whenever you see it passes through the red line of 5 minutes, you come to 15 minutes straight and wait for it to touch the red line here. The moment it touches the red line here, you take it at that point. You get? You take it at that point. And when you take it at that point, you have the 90% tendency to win that trade. Okay? So that is what we mean by seeking the higher time frame. Now, last one, but not the least. Never chase the big move. Don't chase the big move. When I say chase the big move, I think I've said that before. I said I was going to point it again. Anytime you see a trend going off, can you zoom the candles? Let us look at the candles. Sometimes you see blue candles like 4, 5 together, meaning the first one, second one, okay, and you're like, this trade is going. Will you come back to my time? Will you come back to my own area? And then you now say, let me please join it. Now, when you join like that, you lose that trade most times. You know why? Because it's already on its way up. Like I said before, you don't want to join a moving bus, a moving vehicle. You want to stay and wait for it to come. Because if you join the moving vehicle, you don't know, maybe that place you join is the bus stop or is going backward after that place, coming to turn, which will take you backward. That's why you see when you enter a trade in between without waiting for it to come to resting point, it can reverse on you and you lose that trade. All right. That is the last part on entry reasons, okay? For binary or for what we do. What is the first one? Number one, target area of value. What is the area of value? The resistance and support. As I explained to you, like bouncing castle. When they get to that one, they must bounce downwards. When they get to the green one, they bounce upward. Number two, consult the higher time frame. When the 5 minutes is not aligning, go to the 15 minutes. But when both are aligning the same red, they're on the same area, take them. Yes, that's the first one is area of value. Yes. Second one is consult the higher time frame. The third one is never chase the big moves. Okay. Now, guys, it's question and answer time. So ask me all the questions. And some of you already gave me some questions before now. I'll be answering them while you are looking for the ones you have for this particular call. Okay. Remember, it's recorded. You can always watch to understand better. Okay. Now, someone asked me this question. I don't know if she's here. Let me see. Her name is Deborah Queen D, right? Please, if you are here, can you signify? If you are here, type I'm here. I am here. Let me see. Type I'm here. Because if you are not here, there's no point answering the question because she was one that sent these questions. If you are here, can I see your hands up? Let me see. Okay. No. Yeah, okay. You can stop sharing. But I don't know if one of their questions is about things that are already on the screen. Okay. Deborah, are you here? That's from Kumasi. Okay, she's not here. Don't worry. Let me answer those who are here. All right. I think you just hold on a bit. Sorry. So if you have any question, can I answer them now? Mm, okay, partially. King B, which area is that? That I asked for 6.5. My God. So up to the remaining half. When it doesn't touch. Not much question here, anyways. Okay. Um, I think area of value was where most of the people said, okay, when you said resting point, what do you mean exactly? Okay, good. Coach, I didn't get the consult a time. Okay, don't worry. All right. Sorry. We're gonna do that again. That's if you're on 5 minutes time frame. Marcelina, if you're on 5 minute time frame like this one now, one candle means 5 minutes. Okay. Does that mean what? I need to take the question from the from the bottom. Okay. You said each candle is has a specific time frame. Example 5 minutes, 15 minutes, etc. Does that mean that for a specific time frame of 5 minutes, if the market is on a downward trend, it can't change to an upward trend? It can't change. I don't understand. The trend that is downward is downward. It doesn't just change. Before it changes, it will take some time, and then that means there's a reason for it. Maybe a news or the trend is tired and it's trying to reverse. So those two questions doesn't go to they don't go together. Sorry, those two questions except you are going to rephrase your question. Okay, okay. Someone said you didn't get the consult a higher time frame. Okay, that's one. I think it would be better off when we are using a laptop on, let's say, on Monday. Okay, let me just try again. So higher time frame is if you're on 5 minutes, for example, if you're on 5 minutes right now, okay, 5 minutes means one candle means 5 minutes, right? Now, do you know that three candles here means one candle in 15 minutes time frame? You understand? Okay, good. Thank you, Francis. So now, do you know that three candles here means one candle in the 15 minutes time frame? Is a simple logic. Like, of course, how many five can we get in 15? Three. So three candles make 150 minutes candle. Okay. Now, when you are trading on 5 minutes candle, there are sometimes some things will happen on 5 minute candle. Like when the 5 minute candle is going to touch the red and it's now passing above the red, it means it's already passing above the red. So it's passing above the limit set for the 5 minute candle for that moment. Now, the moment something is passing limits, okay, let me give you an instance. For example, a bus is coming to a particular bus stop A, bus stop B, bus stop C. Now, the bus is coming from bus stop C and is going towards the next two bus stops. Now, the moment the bus get to, when the bus gets to bus stop B and it did not stop, everybody will already know that, oh, meaning this bus is going to bus stop A, right? So let's say bus stop A is the 15 minutes candle, while bus stop B is 5 minutes. So when this black line, remember the black line tells us where to take our trade from. If it's touching the red, that's when we take the trade. But you now see it now passing above the 5 minutes, as you can see now, see, it's passing above this red line. Meaning it's already leaving the 5 minutes zone. It's going to the next zone, which is 15 minutes. Oh, sorry, your battery is about going down. So the moment you see the line passing above this red line, then it's going for 15 minutes. Then you switch your time frame to 15 minutes to get a clearer picture. And the moment you get to 15 minutes, you see that that same thing that is higher than the red line here on 5 minutes, on 15 minutes is not really higher, as you can see it now. Can you go to your left? See that same line that was above? That's it. That M, sound like M. Yes. See, it was above on 5 minutes, but it's just on the exactly red line on 15 minutes. So you switch to 15 minutes, which is higher time frame, and you take it at this point. Don't take it at the other point. You take it at this point. You come to 15 minutes and take the trade from this point. So when you take it, you can now take it for your 5 minute expiration time. Okay. So that's what we mean by going for a higher time frame. You only go there when the condition says when the line passes through the red line above. Okay. I hope I've answered that question. Coach, please repeat the M movement on the 5 and 15 minutes. The battery of, okay, you know what we'll do, guys? I will send. Okay, yeah, you get it right, Francis. Can we still take trades on 5 minutes when the stock is above the line, while the resistance is touching the line? Okay, now such cases, yes, you can. But you have to go and check 15 minutes and make sure that it has not make move. Like if the movement is above, as in between the green and red on the 15 minutes, you wait for it to get to the red. So you know what that means? That means if 10:45 is here, and you now see that the the line is touching the stochastic, okay, and as it's going above the stochastic, but it's touching the RSI on the same line, okay, and it's 10:45, and you're supposed to take a trade. You now go to 15 minutes to check. You now see that it's actually on its way to that red line as well on 15 minutes, but it's just that it's halfway. Don't take the trade. Wait for next 15 minutes, which is 11 o'clock. By then, it will get to that 15, because if you take that trade, you are taking it halfway. You may be thinking you are taking the trade at the right point, but the trade is not respecting 5 minutes. It's going beyond 5 minutes. Like I said about the bus stop. If the bus is coming from C, it now passes B. It means it's going to A. It's not stopping at B. So if you now go and wait for a bus at B, it will leave you and go. But you need to go and wait at A because it's already going towards A. Do you get? No, you don't. That's why you don't enter the trade without a reason. Do you get? So you don't enter the trade first. So that's why you calm down. Like me, what I do is the moment I see that the time is here and I'm waiting for it to touch the red line, I will make sure that I see where it's going. So if it's touching the red line and it's on the red line, it's not going above it, I will take that trade. Okay? I will take that trade on that 5 minutes. But if I see it passing above the red line, I will pause. I won't take the trade. So don't take a trade until you know where it's going. But you're already on alert on your broker, right? And the good thing about this trade? Before your time, which is 10:45, it will decide where it's going actually. Right? This 10:42 now, you would have seen it showing you where it's going. So whenever you see it passing above the red line at 10:42, when it's 10:45, don't take it. Okay? See what it's going to do. Do you know the worst thing that will happen? Worst case scenario, you miss that trade. Another one will come, and you jump in the trade and losing your money. Which would you prefer? To miss the trade or miss your money? I mean, lose the trade or lose the money? That's not sounding right. I mean, miss the trade or lose your money. That's what I would say. Which would you prefer? No, you prefer to miss the hand. That's what I'm saying. It's not right. Miss the trade. So you won't lose the trade means losing your money. I mean, use the word miss the trade, which means you didn't join the trade at all, or you join and lose your money. You get? So you can only roll over. Rolling over twice will give you additional 10 minutes. Yes, but do you know the problem with that? Do you know the problem with rolling over? I mean, rolling over is okay, but the question is, what if that thing, as in the line, the market is heading for the 15-minute line, which means it will go above your entry. You already entered now at 5 minutes. It has gone above your entry and it's supposed to go below your entry because put. But you know that sometimes you go above your entry and till even if you do roll over 10 times, 10,000 times, you only have enough time, but that time will not come down to that your entry. And that's why I see someone would go and join the trade. Okay, like there was a trade I was selling on swipe option. I think USD Most people took that trade because the strength was not aligning at the time. Most people who took that trade, they lost the trade. But one person won the trade. And I say, how? You know what happened? The person got there late. People took the trade for a put at 520, expecting that it will go down after 520. But the trade kept going up. Okay, sorry, it was a call. It was a call trade at 520. So they expect that when they enter the trade at 520, it's supposed to go up. And guess what happened? People entered at 520, which was on 5 minutes time frame. They entered at 520 according to the educator's time and the price. And then the trade kept going down even after 520. And they have entered for 5 minutes already. They rolled over. So the lady came in late and saw the trade already at 490 something. And she entered at 490 something. The trade did not get to 520. It left 490 something and got to like 505, 511. And it spent the whole time on that 505, 511, and people rolled over. It never got to their home. It never got to their time, to their entry. It stayed between 5495 and 505. That is what happens sometimes when you roll over. Is just to give you enough time, so long you are sure that that trade will come to that entry again, come to that area that you want it to go in that time. But there are sometimes the trade will decide and stay and keep going back and forth around an area, but it must have covered the real entry, but it won't get to the entry where you entered from. Such you roll over and then lose all the money. Point or reversal is easy to understand. That's another topic on forex, but I'll just tell you, anytime you see a trend going upward or downwards, and then after going upward for a while, you now see plenty wicks on the point and consolidation, which means for range, we have three types of structure, which is uptrend, downtrend, and range. Range means, or consolidation, it means it's neither going up or not going down. Okay, whenever you see that the trend is about to get tired and start reversing, but you don't really need that when it comes to our binary trading, because do you know that market trap has actually taken care of many technicalities? That's why I'm not explaining. That's why you don't need to learn. Like I don't really talk much about support and resistance, reversal, trend line. You don't need all those things. Because market trap strategy has done all those jobs for you. The only thing you need are the ones we talk about when you enter, stability of this and all that. You know, so that's that. Yeah, miss the trade. Okay, sir, can we take trades on 5 minutes when stuff? Okay, I think I've answered that question. My question, please, timing in regards to areas of value. Yes, timing and areas of value. So, which means areas of value is just telling you that it's good to only enter these trades at this point, because this is the point where it's come to rest. You enter at that point, but make sure that that time you are entering is also aligning with the time. It must be on timing, either o'clock, 15 minutes, 30 minutes, 45 minutes. That's the minute. That area of values and timing goes together. Okay, what is the reverse? A reverse likely to happen. When is the reverse? Oh, you can't tell. You can't tell about reversal when it's likely to happen, but you can know when it starts happening. Anytime you see plenty wicks, what does wicks mean? You see a candle, short candles, and long, tiny things. Those tiny tails they have on their head and their bottom. That's both the top and the bottom. You see those lines. When you see short candles and you see plenty lines, that trend is about to go down. Then also, the good thing about market trap, you don't even need to worry yourself, because you see the strength. The strength will be telling you now. When you start a trade whereby AED USD, AED was 70, USD was 30. Then all of a sudden, you start seeing USD coming to 50. Then you know that something's about to happen. 50, before you know it to be 70, 65, then 70, 70. Such you don't want to put your money on that. So the strength of the currency will tell you when a reversal is happening. But normally, without market trap, if you are to be using trading view, it will be too technical for you. You have to be looking out for those weak things I'm talking about, right? Okay, time frame. I mean, okay, I've answered that one. I didn't get the concept. I have to answer that one. It's resting point. What do you exactly mean? I think I've answered that one also. Resting point is the point where they come to collect more energy. Like if it's on the way up, okay, if the trend is on its way up, the resting point will be the green. Whenever it comes to the green, that's when you enter the trade. If it's on the way down, resting point will be the red. Whenever it comes to the red, that's where it comes to rest to get more energy, to get refueled, like coming to a filling station. I think these are the questions, right? So outside this, any other questions you can always ask me, private message, put it on the group, watch that video and all that. Guys, I thank you for this time out. On Sunday, we're gonna have a call. I'm gonna have a session with all of you. But this time around, it's not about trading. It's everything. It's about everything. Trading, your business, IBO, the mindset, preparation, awareness. It's like an inspirational event. Kind of, you need to be there. We need that ginger for the week coming, and also for the 90 days, and also for our entire success in this academy. This is the best thing you can do to yourself. I'm telling you, 90 days can change your life. Learning how to trade can change your life. Guys, I've said it several times. Imagine you trade your money, trade your account to a level whereby you have like $10,000 as your balance. That means your 3% will be $300. That means 60% will be $180. That means when you take three trades in a day, you have $540 per day. So you are paying yourself $540 every day, multiplied by 4 days, even if you're not trading on Fridays. That is over 2,000 plus dollars in a week. What are we talking about? You know? Then when you have that kind of account, you can now go into DCX. You see, when you go to DCX with $100 and all those ones are gambling. You won't enjoy DCX. I'm telling you, I'm talking from experience. I made so much money on DCX because I managed to trade to $10,000 and then gave me more. Because with that, you'll be able to withstand the stop loss and all those stuff. And you won't be staying long in the market. Little movement, you already make so much money because your lot size is bigger, because your 3% is bigger. Then you can even now invest in NFTs from the DCX and make more money. One of the training I attended tonight, okay, the coach was showing some of the NFT that was called. Guess what? One was called for 0.05 Ethereum, and they projected that it's going to be 0.07, which means 0.02 Ethereum, which is almost like $700 profit within one, I think 2 hours or one day. I can't remember. Imagine making $700 profit in one day. IIM Academy has a lot of products for you to invest in, but you can't invest if you don't have fun. So to get fun, start with Biz Binary. Build your account for 90 days. Become rich. Have enough balance that gives you $500 every day that you can put to even buy Bitcoin, buy this, buy that. Eventually, you'll be rich. Just you'll be enjoying all the packages. But if you keep going here and there, some of us, if you calculate how long you've been in academy, imagine you started the first month you joined IM Academy with your 90 days game plan. By now, you'll have been richer. So don't postpone your 90 days. Okay? All right, guys. Love you all. Remain outstanding. God bless you. Cheers.